Credit cards are a really handy tool, and if used right, they will put you in the best possible financial position long term. Today I'll cover the difference between a debit card and a credit card, why you need a credit card, the perks of having a credit card, and some common fees that come with a credit card and how to get out of paying them. My apartment is really messy because I just moved, but I really wanted to talk about credit cards today, so we're doing it. I thought I would first discuss the difference between a debit card and a credit card because there is a distinct difference. So for a debit card, if you open a bank account, you almost definitely have a debit card. And when you use a debit card, the funds are withdrawn directly from your bank account. It's basically an electronic version of making a withdrawal from an ATM, and you can only spend the money that's in your bank account. But more importantly, since you are using your own money, there's no credit involved, so you're not accumulating any debt while you're using a debit card. And this is important because we want to build credit history, which I will touch on more later on. A credit card, on the other hand, lets you borrow money up to a certain credit limit, and that credit limit is set by the card issuer. When you make a purchase using a credit card, you're essentially borrowing that money and you'll be repaying that money at the end of the statement period. So let's talk about why you need a credit card. Reason number one is to build credit history. If you don't have a credit card, the most common ways to build credit history might be taking out student loans, taking out a car loan, basically taking out some sort of loan. And that's also essentially what a credit card is, but you're basically taking out loans on things that you buy every day and you're paying them off within a very short amount of time. And one of the ways in which you can build a strong financial presence is to use a credit card for your everyday purchases, for as many purchases as you can, and pay off these charges in full at the end of every month, which will raise your credit score. And a high credit score is important because it basically tells any lender how likely you are to pay off your debts. If you're renting an apartment, the landlord will definitely take into account your credit score when they're looking at prospective tenants. So if you have a high credit score, you have a higher chance of getting the apartment that you want. And when it comes to buying a home, many of us will take out a personal loan to buy our first home. The lender will also rely on credit scores to figure out what is the interest rate at which they will lend you the money. If you have a low credit score, they might consider you risky to lend money to. So your interest rate on a home loan might be higher than someone who has a high credit score who is not as risky to lend money to. The prices of homes are in the hundreds of thousands of dollars, and if your interest rate is even 0.5% or 1% higher over 30 years, which is the average loan term of a home loan, you could be spending tens of thousands of dollars, maybe even hundreds of thousands of dollars extra in interest rate on your home. Not to mention, if your credit score is really low, you might not even qualify for a loan. And the first credit card you open, you'll want to make sure that it's a no annual fee credit card, or if you want to pay for an annual fee credit card, you want to make sure that you have the option to downgrade to a no annual fee credit card. And this is because some people say you should keep your first credit account open for as long as possible. Because if you close out your first credit card, the average age of your credit history lowers. I think this is more important if you are on the younger side. It's not the biggest deal though, because your first credit card or any other credit card account, even if you close it, the history will still be on your account or your credit report for I think about 10 years. But it is a minute detail that you may want to consider. The next reason why you should choose to use a credit card is because of the security. Every once in a while, as I'm looking through my statement, I see a charge that I know I didn't make. So that means someone either stole my credit card number, they somehow got the details of my credit card, and were able to buy things with the credit card. But if someone overcharged you, scammed you, someone stole your card and started buying things with your card, you can submit a dispute with the bank. And credit card disputes are so much easier to get your money back on than debit card disputes, in my opinion. The main reason being, with credit cards, you haven't lost any money. Any charges that were made to a line of credit. And in that case, you can tell the bank with certainty that charge wasn't me. And it's up to the bank to handle it and to get their money back, because at the end of the day, it wasn't your money. With a debit card, the money is already taken out of your checkings account. So you're fighting for your own money back. And I think there's also a time limit for which you can claim fraud also. You incur a much higher risk when you use a debit card, and you're not getting any of the perks either. But overall, it's really important to read your statement when you're paying off your credit cards in full, so you know exactly what you're paying for. Before we go into the perks of having a credit card, if you like this video so far, please like and subscribe. because it really helps me know what types of videos I should invest more of my time into so I can put out the videos that you want to watch. The biggest perk of having a credit card are the rewards. You basically get paid for spending money on things that you would have already bought anyway. The most common types of rewards come in the form of cashback and/or airline points that can be redeemed for travel, for hotel stays, maybe even Amazon purchases too. If you're interested in opening a credit card, I would highly recommend Googling best credit card for whatever you're trying to optimize for. It could be for travel, it could be for cashback, it could be for building credit if you're a new credit card holder. And if you're not willing to pay an annual fee, I would also specify that in your Google search as well. Right now, I have a few credit cards, and the main one I use is the Chase Freedom Unlimited card, which has no annual fee. I don't have a card with an annual fee because I try to buy as little things as possible, so I wouldn't be getting that many points anyway. Also, the benefits don't always align for me. For example, one of the benefits for a popular travel card is 5 times points back on Lyft and Uber rides. But I generally don't take rideshare, so that's not even something that I could even assign a value to. So if you are considering an annual fee card, make sure that the points you get from the sign-on bonus, the benefits of the card, are things that you actually would get value from. I'll stick my referral link for the Chase Freedom Unlimited card in the description below if you're interested. I think if you sign up with my referral code, then I get some sort of bonus. Now let's talk about the common credit card terms and the common fees. I'll preface this by saying that if you're a responsible credit card user, you should not be paying any fees other than the annual fee if you choose to. If you do incur a fee, I'll also talk about how you can get out of paying a credit card fee. So first, there's the credit limit, which is the maximum amount of money you can borrow on a card. There's also an interest rate. It's called an APR, and that's the cost of borrowing money if you don't pay off your credit card in full. And the interest rate really shouldn't matter to you because you should always be paying off your credit card in full every month. If you aren't prepared to do that, don't use a credit card because you will get into credit card debt. It's not worth it to be in credit card debt. It just isn't. Every month, there's also the minimum payment, which is the least amount of money that you have to pay to not incur any late fees. Usually this amount is $25 or $35 depending on the card. But again, you should pay off your balance in full every single month. So it shouldn't really matter what the minimum payment is. I mentioned the annual fee already. Some credit cards have an annual fee that you have to pay because the card has access to certain benefits. Some annual fees can be really expensive. They can range up to $500, I think, can be the more expensive side. These annual fees can be worth it if you know how to take advantage of the card and take advantage of the points. And once it's no longer worth it for you to keep a card with an annual fee, you can either close out the account or you could downgrade the card to one with no annual fee. Basically, you're switching it to a no annual fee card. There's a late payment fee if you miss your payment on the due date. There's also a foreign transaction fee, which is a charge for making purchases in foreign currency. This might be 1 to 3% of the whole transaction. I've incurred all of the fees I've listed at one point or another because I have missed payments. And I'll take this opportunity to remind everyone to put your credit card payments, any other monthly recurring payments on autopay so you don't have to think about it. But also check your statement. But yes, anytime I've incurred any of these charges, I've always called customer service and asked for my money back, and they have always given it back to me. Obviously, this won't work if you keep incurring the fees, but for the first time, or maybe even once in a while, it has a high chance of working, in my opinion. Even for the annual fee, I've heard of people calling after the first year of having an annual fee credit card and negotiating the credit card annual fee down. I had tried it, but it didn't work for me, so ultimately I just downgraded it to a no annual fee card. And my last tip is that you'll want to keep your credit card utilization low. The rule of thumb is to spend no more than 30% of your credit card limit. So if you open a credit card and your limit is $10,000, then on a monthly basis, you want to make sure that you're not spending more than $3,000 on that card. If you do need to spend more money and you can afford to, then you can call into the credit card company and ask to have your limit extended. You can also open a new card to make your overall credit limit higher, but make sure that you're doing everything responsibly. And the reason why you want a low credit utilization rate is because it builds your credit score. And don't spend more than you can afford. Pay off everything in full every month. Otherwise, just don't open a credit card because credit card debt is just not worth getting into. Credit cards should be used used to your advantage. You should open one as soon as you can so you can have as extended of a credit history as you can. This is especially important for your first few years into adulthood, and it'll set you up for later milestones in your life, like when you rent your first apartment or when you buy your first home. If you like this video, you might also like my next episode on saving. I'll see you there. Bye.